Morning, everyone. Hope you're well. Hope you're well. How's everyone's day going? So we'll start off with the dollar. So the dollar's kind of approached that zone that we spoke about for the last couple of weeks. You know, we were speaking about the dollar heading back down towards 102. So it is in a pretty key area. From a daily perspective, we have an area of demand that's just over here, which price hasn't tapped into yet, but it's fast approaching that. Now we'll have two possible scenarios here. You know, do we see price just kind of reacting from this zone and continue to push to the downside, or do we see some strength coming in for the dollar? For me, the likelihood is, from everything that we're currently seeing, is weakness for the dollar overall. But this, you know, this could act as an area for some retracements into areas of supply before it continues pushing down. But overall, do I see the dollar heading back to the top side here? No, I don't. And again, that just goes based on the fundamentals. You know, the fundamentals are weak. Even Fed Chair Powell testified yesterday, and his testimony was pretty weak in terms of, you know, they said that they are going to probably rate hike again at some point in this year, you know, before the end of this year. So, and that's going to be one maximum. So looking at that, you know, the market doesn't really have much confidence in that. And even if and when that happens, it's one rate hike, and then after that it is a pause, which is what we're at currently right now, and then we'll just see price eventually holding that rate and then reversing. So steam for the dollar is quite quickly running out, which we can see it's started to happen anyway. So technically, I see this still as a bearish continuation for the dollar. Like I said, we could see a retracement back into like an area of unmitigated supply as a pullback, and this area being an area of demand. We could see that reaction from this point, but apart from that, I see the continuation to the downside for the dollar overall, and that just allows for the likes of pound USD to continue pushing higher. Now we could look at pound USD from a higher time frame perspective. You know, we could see we had a break there. We then had another breaker structure over here. We had this pullback. Now again, we didn't have the deepest of pullbacks on the pound, but looking at it from a higher time frame perspective, all you kind of really got was an area of so-called support, and price rallied off of that. So from a weekly chart, we're looking at this. Where is pound headed? You know, in my opinion, we're at least headed towards 1.3 as a first point before we can kind of see some sort of a deeper reaction. So I see 1.3, and then we could see 1.36, and that aligns with that pullback. Before we see some, I don't expect price to blast through that zone, but I do see price heading up towards this region, and then maybe having like a deeper pullback before we start to see the next kind of push to the top side. Now overall, you can see pound has been weak for a very long time. You know, price has been printing lower lows, lower highs. We could see we had a lower low, lower high, lower low, lower high, and then we had a lower low. So we're now working our way towards that lower high. So the natural course of price is going to be to try to create a new low, which I doubt we'll kind of get. We could see a nice rally to the top side from that. So from a high time frame perspective, price is nicely pushing towards its overall target. Now, as I mentioned, we broke above structure and we started to push higher. Going down on the 4-hour time frame, again we can see we started to create these highs and continue pushing up, and then we came into like an area of support turning into resistance. Now again, I don't trade support resistance, but these things do matter. But all it was that M15 pullback. So we could see the last breaker structure that we had over here to the left, and then we had this huge push to the top side. Now after we had this huge push, you could see we entered a retracement. This was the key area that price was looking to tap into. Now price wicked into this 70 to 79%. We did have an area of demand sitting deeper. Now, not saying price cannot come down to that. Price absolutely can. We do have an area of demand here that's unmitigated. Just change this. So we do have this area of demand that's unmitigated, and in this downtrend of a pullback, we had this low, we had a lower high, we had a lower low. We've had this lower high, so we could see this before we see the next push to the top side. So yesterday my trade was, when I took this trade yesterday, I'll just explain my trade from yesterday. Now, as we tapped into this region, what did I see? Now, you could see me looking at this. So as price is approaching this area, what can I see? I can see the last internal breaker structure we got was here. And price internally is creating this internal structure coming down. So at this point, I know that this is a key point of interest for price to reverse, but also I can see we had an internal breaker structure here, so we created a low and there was our high. Now if price was to come down here and shift, I could look to trade this back into this area of unmitigated supply, where we have all of this imbalance here, which is the natural place for price to come to either continue down or break above this high and start and to confirm that that pullback is complete. So now I'll carry on playing this. You can see we continue pushing down here, and here we have that change of character, and we see volume starting to kick in. Now, you know, supply failed, we broke above, we reacted to this unmitigated area of supply. Perfect tap into that 50%. We have our fib zone here. Now price, you need to remember here, we always wait for price more or less to tap into our zone. This was just a build up of liquidity, you know, so as price did this, all it did was create some liquidity, induce early buyers. People that probably bought here might have their stop losses tight below this area, or however, especially if you're scalping, you're gonna have pretty tight stop losses. And then price came into this region here. So my trade was literally as price started to push above here on this candle here, because now we've had the change of character, pullback is complete, swept liquidity, and my target was purely just, you know, it was a 1 to 3.6. Our trade was purely up to the next area of supply, because even though we're in that high time frame reversal area, I know that there's still demand below, and I know that in order for me to have confirmation that price is switched, we need to see a break of this high. You know, the change of character here is just allowing me to trade the pullback off of this here. That is it. It's not, I can't start to trade this further up. And then as price comes in, you can perfectly see again. Now if anyone failed to get in, like if you're looking at this and you're thinking, oh shit, I've missed the move here, well no, you haven't, because there's a change of character, there's the internal breaker structure. So if that's the internal breaker structure, where's our low? There's our low that caused this high to break and created this high. So if we now mark our fib from the low to the high, look what happened here. All that was a pullback into this area of demand. So you could have got an entry perfectly there for price to eventually go and hit our TP. And like I said, I don't need to be holding trades much longer, because internally we are still bearish, you know, because there's our lower low, there's our lower high, there's our new low created. So what's there to say that price is just not going to come up to this high to come down and create another new low to tap into this before shifting? Especially when we can, on a higher time frame, we can see that there's still demand here, there's still some level of inefficiency and imbalance that price can come down to mitigate that. And then if we just play price out, and you can see the price is hovering around this region here now. Now I'm not saying price has to come back. If it doesn't come back and it breaks above, then I'll forget about this demand zone. You know, then I'm not expecting price to come back into this area. You know, not every demand or supply has to be mitigated. We need to remember that structure is far superior than everything else. And that was kind of a similar concept of my trade. So my trade on AU is slightly different from the perspective of, we had a 4-hour breaker structure, we saw this aggressive shift. So for me, price has entered a retracement on the 4H. Hey Marcia. Now on a 15-minute, you could see if we come over here to the left, so I had a short over here, so we had a 15-minute breaker structure over here. So we had our M15 low here, our M15 high here. We had an internal change of character here on the M5 telling us price has entered a retracement. So in order for price to continue bullish, we would really expect price to react off of this area of demand and continue pushing higher. Well, it didn't. It broke that, and what also did it do? It broke the M15 low and created a new low. So what's that telling us? That's telling us we've entered that 4-hour retracement. So we then have an M15 breaker structure to the downside, and within that, what can we see? We can see price creating lower lows, lower highs. We had this massive push down, we had a pullback, we then had this push down, and then what do we get here? We get a change of character because we close above those. EU, yeah, no problem. So we get a change of character, and what's that telling me? That's telling me right after this M15 breaker structure here, we've entered an M15 pullback. So we have the high to the low. Where's the likelihood that price is heading back up towards? Most probably price is looking to head back up toward this area. We have a huge area of imbalance. We have this unmitigated demand here, and we have this unmitigated demand that sits deeper within this fib retracement. We have lots of liquidity resting above here. So when we had this yesterday, as we tap into this, you can see price came in, pushed up, respected this, and there's my entry. You know, so pretty nice. Was sitting at like 30 plus pips on this trade, and we'll continue to ride this up and see how it goes. EU, yeah, let's go over EU. So EU. Now remember today, guys, we have a monetary policy for pound at what time is it? I think it's at 12 or 12:30, 12 o'clock. So expectation is a 0.25% increase, which is guaranteed going to happen. I think what's more important is what's their stance going to be. You know, do they do 25 or do they come out and go higher? I don't think they're going to go higher, but do they come out and be quite bullish, which probably they need to be, considering yesterday CPI ticked up again, which isn't good, you know, which isn't good at all. So you could see now euro nicely breaking above. The daily pullback was complete over here. You know, we called this for weeks. And where's price heading? Looking to take that week high out. Same thing like we covered on pound. We had a weekly break. Where's our weekly high? There's our weekly high. Here's our weekly low. Where is price heading up to? In my humble opinion, I think price is heading towards 1.18. Target 1 right now is for price to break above this daily high. Where's our next area of supply? You know, next significant supply is at like 1.46, 1.16 up over here. So overall, we can expect some bullish 4-hour structure to remain to the top side. Now, you know, we had this pullback here. So if we look at the last retracement here, and then we had this push up from here to here. Now price was close to that 50%, never came in deep enough to that 50%, and then it started to rally off to the top side, which again, you know, price can do whatever it's going to do. We just go with the flow. So as it stands, I'm not really looking at this area of demand now, because this will eventually, hey Mr. Khalid, hope you're well, this will eventually get mitigated. In my opinion, I think price now is going to continue pulling back into this demand and continuing higher until we break above this daily high. Once we break above this daily high, then what becomes our daily swing structure? This becomes our daily low, and say this becomes our daily high if it goes up to here. And then at that point, we can then look at this and say, right, okay, you know, say price continues pushing up to here, then this unmitigated area would act really nicely as a daily pullback before we see the shift and continue higher. So even if we see huge area of demand below, once structure has formed and price is pushed off and that high has been broken after this retracement, we shouldn't be worried about this, because this will eventually get filled and mitigated as part of the weekly, part of the daily pullback. So as it stands, DB, the way I would be seeing Euro USD is, there is the low, current high. You could perfectly see we have demand here. Now whether price reacts from here or wherever it reacts from, I'm not really expecting price to come in deeper down here. I would be expecting this to be mitigated once the daily has broken. So that's my expectation on, or my view on what we just spoke about, Euro USD. Now again, this rally happened yesterday due to news. You know, it was Fed Chair Powell speaking at 3 p.m. UK time. And it was pretty dovish. Remember guys, if there's any pairs you want me to have a look at, just drop them in the chat. From which order block will you take confirmation? What pair are you talking about, Khalid? What, Euro USD? I'm not looking to I'm not looking to buy or sell this at all where it is right now. There's nothing for me to trade here. I don't trade based on that at all. You know, again, it's what works for you. Price has had this big extension. For me personally now, all price is doing on a 5-minute chart is now creating some structure. Me personally, I see the M15 low here, and this is the current high. If price shifts here, then there's trading opportunities down into 1.09300. Otherwise, if price gets here and we see a shift, then I'll look to buy at this region here. I don't trade impulsively at just where price is in the current present moment. Gold is it's just messy right now. Gold for me personally, so you can see the good thing with gold at least is, you know, gold is slowly but surely working its way to fulfill that daily pullback as we spoke about. You know, we had the daily breaker structure here, the 4 hours shifted, and then gold is working its way down to fulfill this daily pullback. Now I've got I think this is like a demand zone on an hourly time frame I've kind of marked over here. Yeah, over here. But we could see gold coming in deeper. So we are seeing price heading down. We have seen price take out previous low here. You know, not a clean break of this previous low on a M15. Yeah, we have broken below it. We can clearly see here. So as it stands, it's pretty messy. You know, gold is pretty messy because everything that happened here was all internal. So that was the highest point, and then that was the lowest point. So we currently have our lower high and we have our lower low. So all price did here was pull back into an unmitigated area of supply. Now I kind of missed it. This is what I was looking at. And this is where fine margins are super important. You could see here we have this area of supply that's unmitigated. And this was the high, this was the low. All of this is just internal because all of this is internal. And this is where we have, you could see where we have the breaker structure. So as we approach this region, you know, should have really been looking to short, because part of the M15 move down, we created this lower high, and then prices was pushing down here. And now you can see prices creating these lower low, lower high, lower low, lower high. So what I'm looking for is, if we can see a shift, then I'll start looking to buy this. But till where? Let's go to the 15-minute. So we have our 15-minute high, we have our 15-minute low. So there's the high to the low. Now look, bang on. Look what sits within it. Our perfect area of supply sits right in there. We have a zone here, and we have another unmitigated zone up over here. So we have two zones. The likelihood is we could see a rejection from this one. So if price shifts here on the lower time frame, if we see a move above, then I'll look to buy up into 1954. And once the price gets to 1954, we can then see the next push to the downside on gold. But I missed out on these sells here. You know, that would have been 120 pips. And again, like, where is gold sitting right now? Let's look. Boom. So we could probably see another push into here and then see a shift. We could see that. Or price could continue bearish. You know, the only time I'm going to look to buy this, like I said now, is realistically after this internal breaker structure here. We created this low, we created a lower high. We should see price continue to do this until it breaks this low and creates a new internal low. If it shifts structure before it does that, then what is that telling us? There's our early indication that price has entered a M15 pullback. And why can we expect an M15 pullback? Because we had an M15 breaker structure here. Simple. But super important, you want to wait, you know. And now, am I going to short this? Not really, you know, because the shorts were up here, and because we're so close to this pullback region, there's nothing to say price won't react from here. Yes, over here we could have shorted. Why? Because at this point, when price came down, this was the retracement, this was the next break. So if we look at this high point here and we come down here, did price mitigate equilibrium? Yes, it did. So this is a valid pullback. Now again, the guys out in the 1-to-1, they'll know what I'm talking about. So that's a valid pullback. Then we had another break. So once we have a break, what does price do? Price comes to the extreme, but look where price closes. 50% of this GAN box. So any rejection here, we could have looked to trade it from here, put our stops above, closes there, and our original target should have been this region anyway, and that would have been a nice 1 to 5 hour trade during the London session this morning. But again, I wasn't on the charts at that point in time. But now that price is here, yes, this is a nice area of supply, but do I really want to look to trade this down when we're so close to this region now? Not really. Still a higher probability trade, because the overall direction is still bearish, but with an M15 break already happened, we can expect the internal structure at some point to shift. Yeah, I saw that anchor. Nice move. Nice catch. Nice catch. Now, if anyone is looking to short, you know, I wouldn't short before price at least taps into this area. And have very tight stops. There is no setups. For what? For what pair? Waiting for a few days and I got stop loss. There is that what I do when it happens to you. You're waiting for a few days. Are you a swing trader? What I do, what you do when it happens to you? Nothing. End of the day, we all take losses. You know, as long as you took your trade based on your plan, your trading setup, then you know it's part and parcel of it. I took a loss yesterday on Euro USD, purely because of news. You know, it's just part and parcel of it. No one has 100% win rate. We all accept that. So as long as you stuck to your plan, you just move on and execute your plan again. You know, we rinse and repeat. That's what we do. You know, I took a loss on that, but very quickly yesterday, you know, I had my win on GU. You know, we all have to accept that. As long as the loss is you stuck to your plan and you stuck to your rules, then it's fine. You shouldn't be worried about that. And do we have any dollar news today? Yeah, we do. We have unemployment claims at 130. Now again, the last two weeks unemployment claims have been higher than expected, which is obviously weak for the dollar. So we could see that have an impact with gold coming into this region. So you know, we could see some bullish momentum for gold. But again, we have to wait and see. Until structure doesn't break, we just stick to what we know. I have much better feelings when I'm out of the price movers, I think. Listen, you shouldn't. End of the day, the most important thing is, do you have a trading plan? Do you have a set of rules? Do you stick to your rules? Have you spent enough time back testing those rules to see what is the results that the market gives you in back testing? No worries, Anchor. Take care. Good to see you. You know, winning and losing is part of trading. Again, as long as you stick to your plan, you should be all good. Hey Juggernaut, how you doing? Good to see you, my man. Yeah, I've been online for like 47 minutes. I'll probably be hopping off soon. I was just kind of breaking down my reasoning of taking my AU trade and my trade from yesterday for GU. Just some education for people and covering off any pairs that they kind of had. Cheers, man. How's your day? How you doing? You're too stuck in your USD. Yeah, it happens, man. It happens. It's very easy just to get lost and just lose your focus on one specific pair. Khalid, if you just go back to the beginning of the stream and just re-watch it, I broke down my entry on AU and I broke down my entry on why I took GU as well yesterday and why I entered this. So sorry, I'm not being rude, but it'd probably be easier if you go back and kind of watch that. Hey, Joe. Wasn't looking at GU even though I had it marked up. Yeah, gold. Yeah, gold. I kind of mentioned. I'm kind of waiting for gold. Probably more. I'm looking for more buyers on gold. There's probably like an opportunity to short from here to this region, down here. But again, low risk. And again, my breakdown on gold is more from a daily perspective. Gold is approaching that. Overall, it's working its way down into that daily pullback zone before we can see the next push up. On a 4-hour time frame, we can kind of see we've broken below these lows over here. 1 minute looks really wicky. Yeah, I don't really ever trade the 1 minute. We look at the 15-minute time frame. You can see we had a 15-minute breaker structure here. So because we've had a 15-minute breaker structure, what can we expect? I was saying we can probably expect a 15-minute pullback back into some areas like this before we see the next 15-minute push down, working its way down to fulfill that daily pullback. And on a 5-minute chart, we had the last internal breaker structure was over here, because again all of this was internal, and then from here this was the highest point that caused the low to break, which was here and create this low. We then had the retracement here into this area of supply, and then we start to sell off. Now if price is gonna continue bullish and have that M15 pullback, which again, if you see, where's our M15 high? Our high is here, that took out this low and we created this low. So we have this range over here that we're working with. So if I now use my fib from the high to the low, that area of supply is perfect. Lots of liquidity resting above here. But what do we need to see in order for us to trade back up into that? We obviously need to see lower time frame structure shift. Now, after this pullback was complete, we started to do this. So if we see another move into this discounted area and then we see a shift, we could then look to trade this back up. You know, so I'm not overly keen on shorts because we have had an M15 breaker structure. I am expecting an M15 pullback, but the only time I'm going to expect that, now if price is going to continue bearish, then what we should just expect is price to continue doing this until it takes out this previous low. But if we shift, then we can expect prices enter that retracement. My lower time frame is just not on gold. It's on all pairs. I typically enter on like the 3 minute, between 5 minute and 3 minute. You know, I don't really like going down on the one. It's too much noise on the 1 minute. Now again, there's no right or wrong, and that's the beauty of trading. I just prefer to stick to slightly higher time frames and wait for those closure. But again, it's very easy in isolation, people just seeing supply and demand and just trading off of that. But there's a lot more to it in terms of adding additional confluence. It's like, I have my reasonings for, if I was to short, not that, if I was to short from here, what's the risk? Why is there a risk? Why am I expecting price to go higher based on what I've spoken about, the M15 and stuff like that, etc., and the 4 hour? So all of these things play a big part. Like I said, I missed shorts over here. I wasn't on the chart at that point in time, but this was the highest point we had. This was the lowest point down here, and we had this unmitigated area of supply that sat over here. So you can perfectly see price pulled back into that area, and then we started to sell off. And again, the reversal point, if price continues higher, is we create a lower low, lower high, higher low, potentially a higher high from here. So we've already more or less approached that reversal zone in this area here. So for me to try shorting this is very risky. Yes, we probably get a reaction from here into something like this, but we could see this happen. Yeah, there's just a little bit less noise on the 3 minute, 5 minute. 1 minute is very, very noisy, and that's just my choice, personal preference, really. AU's playing nicely, so currently up 35 pips on AU. So GJ, I took a trade the other day on GJ. It was around here somewhere. This sell. GJ's in a funny position in terms of trying to take any trades on GJ right now, purely because if we look at, you want to say, even if you say the 30-minute time frame. So once we kind of did this, and we came down, we took out this low, we pulled back, but here we failed to break below this low. So now price coming back up here, I'm not really keen on shorting this. The only time I would have been keen on shorting this if price had broken this low and then retraced to continue pushing down, but we failed to break the low here. Back, no, I'll have a look at S&P 500. SPX, you mean S&P 500, yeah? Yeah, I'm not looking to long Euro USD. The move has kind of happened again. I covered it. Me personally, if the lower time frame shifts, then I'll look to short back down into 1.09300, and then look to long from there. So S&P 500, I had this region marked over here. So we have obviously shifted bullish. We broke above the previous daily high over here. So no doubt we shifted bullish. We had this area of unmitigated supply. Now what I was expecting is the last pullback we had was here, and then we kind of just rallied. So I'm expecting price to head back down towards 4,000 region, but I was waiting for lower time frame to shift, and we had this strong area of demand. You can see where price wicked into this and rejected, and now it's kind of closing below. It's breaking through this. So you know, price action is pretty messy. But what I would probably say is you've had a M15 breaker structure here. Looking at this on a higher time frame, where is next area of demand? Next area of demand really sits at like that 4314 kind of region. So I would be probably looking at is waiting for price to head back up into like 4385, this kind of region here, and then look into short and continue this trend to the downside. That's what I'll be looking at. To analyze all these pairs at the same time. Two charts are breaking my mind already. The time you spend and the graft, you know, I'm probably just blessed to be able to multitask and do lots of things in one kind of go. But I don't like, what I do is at the end of each week I'll break down all the charts. I'll go through all the charts and then I'll narrow it down so you can see my watch list has 2, 4, 6, 8, 9, 10, 11, 12 pairs, and then obviously I have DXY, which I'm just kind of looking at. So those are my pairs, and I just set alerts and then I just review those pairs, and based on what is where and what aligns with my roles, I'm taking the trade. But like looking at charts and breaking stuff down pretty quickly now is just a second nature. So yeah, Beck, I would continue shorting this, but you probably just want to be careful. What you probably want to see is a break of this, because price is in this area of demand. So what you'd probably want to see is a break of this demand and then a pullback into like 4387, and then look to continue shorting, and the next area, you know, down to like 4321, 4317 kind of region. That's what I would kind of say. And overall, my expectation of S&P 500 is to 0.1 to come down here, but longer term I'm expecting price to from this point to probably do something like this, come down, pull back and continue down at least to 4200, where we have that unmitigated area of demand, and then react, and then continue pushing down to like 4000 before we see the next push up. That's my view. Honestly, it's personal preference. I trade any pair. It doesn't really matter to me. I don't trade. There's nothing that, oh, I trade anything specific. Like you can see, I have all of the pairs here. I go through them on a weekly basis. You know, I trade NAS, S&P, US 30, gold, silver, oil, all of the Forex pairs. Just depends on what aligns with my rules and what I'm looking to put on my watch list for the week. So it's personal preference, you know. And again, there's no right or wrong, but you get some people that are like, I'm only trading EU, for example, because I know how it moves. You know, me personally, I don't think those kind of things exist. You have a edge over the market. The market doesn't care whether you're trading gold or whether you're trading crypto, whether you're trading stocks or whether you're trading FX. As long as you have an edge, and you should be able to replicate that on any chart. Yes, the difference is things like Euro USD and the majors have more volume, but there's nothing to say you cannot trade any pair. So it's personal preference on what you like. I mean, like, what other chart is connected to S&P can determine the next moves? Honestly, I wouldn't really know. I don't look at charts as like connected. It doesn't really matter to me, and I don't view the markets in that way. And you shouldn't really. You should just take the pair that you're looking at in isolation, as that's what I'm looking at. That's it. And just, you have a set of rules. You're looking at a chart. Do your rules align? If they do, you have an entry criteria. You enter. If they don't, you don't enter. You know, I would just advise, don't overcomplicate trading than it already is complicated. That's just my view. So yeah, pullbacks and continuations look good, but again, you do have this demand zone, so you do want to be careful that price could. What you'd probably want to see is price coming back up here. So lower time frame, if you kind of go down on a lower time frame, so you can perfectly see we have an area of supply here. So what you'd probably want to see is lower time frame price probably heading back up here, and then seeing lower time frame shift, and then looking to short. Yeah, GU was clean yesterday. GU was clean, and I was gonna scale in a second entry, but I just had to. I wasn't at my computer. I had to go somewhere and do something. I can't remember what it was. Yeah, but listen, that's part and parcel. You know, there's always moves like that every day. There's so many moves in a week that I miss, which is just part and parcel of it. You know, you're not gonna catch everything. I was watching NQ because it has kind of similar action as S&P. Sometimes NQ was making lower, lower, and reversing. S&P was doing the same reverse before making lower, low. Yeah, listen, if that's how you trade and that's how you prefer to trade, and that gives you profitability, then that's great. You know, like I said, I never look at the markets in like, oh, what pair correlates to this pair, and take my trade based on that. You know, I just never do that. But listen, if that works for you, then that's great. You know, stick to it. Do you take confirmation from fair value gap or fair value gap, or should touch order block? I use fair value gap as a confluence. I don't take a trade out of a fair value gap ever. So for me, price must come and react from an order block, but it really depends. If I'm trading continuation, then I don't need confirmation. If I'm not trading continuation, then I need confirmation. So it really depends, but I never take a trade out of a fair value gap, if that's what you're asking. As you said, nothing is wrong if it works for you. Absolutely. You know, there's 1,000 different ways of trading. Well, not exactly 1,000, but there's probably more than 1,000 ways of trading. The difference is, you know, can you be disciplined enough to stick to what you do? And I think all people are looking for is, you know, everyone wants the most profitable trading strategy with the best risk to reward and the highest win rate. So that's what people search for, you know. So once you can find something you're content with and that gives you the profits, and you can understand it and you enjoy that way of trading, then it's fine. Some are superior than others. And remember, guys, if anyone here hasn't joined our Discord, feel free. The link is pinned to the chat. That's what made G yesterday. We take confirmation from the fair value gap. No, that's not what I did. If you go back and watch what I said, that's not the reason for my entry at all. You know, and if you're looking at it, depending on what time you're looking at it, the time frame I looked at it, what you have a very minor fair value gap between here. That's, you know, it's not my reason for entry for sure. Yes, my first trade on funded. I've been practicing simulations for months now. Nice. Well, hopefully it goes well for you. The most important thing is, you know, if you've been practicing it in simulation, make sure you stick to your rules. If you've been practicing for months, you must have collected a sample size of data to say, right, okay, if you use your trading plan and say you've been back testing or simulating for same thing for 6 months, and in that 6 months, you know, you should know what your win rate is, you should know what your average risk to reward is, you should know if it's a profitable trading system, and if it is, then just follow that plan and stick to it. You know, don't sway away from it. Pretty straightforward. And that's the right way anyway, you know, practicing in simulation. Too many people want to just chuck money into a live account and start trading, which is the worst thing to do. As I do have funded accounts, and I do trade them, but not as much anymore. Now I trade my own personal capital, but funded was a great way for me to excel my personal capital very, very quickly, because obviously the buying power that you get through funded is far superior than, you know, your own capital trying to grow that. And that's what I always say to people, you know, go with funded, because say you have $100-200 account, and say you have $100 and you make $10, you know, that's 10% return. But people don't see that as 10% return. All you really see is, that's $10. What's $10 going to get me? I need to continue trading. And that's where people lose discipline and they end up blowing accounts. Where if you have the same trade idea and say you make 10% on a funded account, you're making so much more money, and it's very easy to grow that capital. So, you know, I use funded early on quite a lot. My payouts were just fueling and funding my personal capital, and it's always great. You know, personal capital, you have no rules, you're trading with your own capital, far superior. But prop firms are great. Some prop firms have monthly competitions you should join. Nice. It's much easier funded. It's just get some money, then trade on your personal. Yeah, absolutely. That's the way I kind of see it. You know, GBP AUD, good supply area. Yes, the GBP AUD, I caught this trade yesterday down into this demand from this supply. Now, my runner got stopped out here, and I should have really looked for a re-entry here. But GBP AUD is actually in a weekly area of supply. So you can see this weekly area here. This weekly chart here. We've got an area of supply here. But what I saw was we had this last pullback here, and then we had this huge push to the top side. Now going on a 15-minute chart, you could see we had a change of character just over here. Just over here. And what can we see? If this is our lowest point, and that's our highest point, we have this huge fair value gap and this area of imbalance and this area of demand. So this change of character is telling us price has entered a pullback. So the likelihood is that price is going to continue down into this region before we see the next push to the top side. Now, you could see here, this was our high. and this was our lower low. So this is the range. So when price did this, I took my entry out of here from this area of supply down into here. Now when price has come up here and broken this high, this is just an internal high, which is all price is doing is coming deeper into this pullback zone. So the high that price needs to break in order for me to think price is not going to continue down here is this one, or unless price did this, came down and then broke above this. So you know, I could have looked for a re-entry at this point, but I was sleeping because this was still during Asian session. I wasn't up, well, pre-end of Asian session really. You can see prices came to this extreme and started to kind of sell off. So prices reacted, this supply demand failed. So any kind of pullback into this region, you know, look for further shorts back down. We've got a daily change. Yeah, you're talking about here, we had this shift. Yeah, absolutely. But remember, having that shift, price could absolutely be pulling back up into this area of supply, or this order block, like some people call it, and then continue down. But yeah, we have shifted. You know, we have shifted for sure. Great for me as a beginner. Yeah, funded is great. You know, just the super important thing is people, because funded accounts are very readily available for you to go and take challenges. A lot of people don't spend the time on learning their system and getting a profitable system before they start trading in a funded account, and they just want to go out there and just quickly do a funded account and expect to become profitable. Getting a funded account is one thing, but then getting a payout is the more important thing. You know, there's no point having a funded account if you can't, end of the day, get a payout. What's the point? There's no clout in just saying, oh, I have a funded account. You know, the whole point you're doing it is so you can make money. So definitely, you know, you're going the right way about it. If you've got a trading system and it's profitable over a long period of time, you have the data to back it up, then yeah, go for it. That's what I just seen. Yeah, correct. You are right. For the daily push up. Yeah, there's loads of liquidity. I still do now. Again, you know, whether it happens or it doesn't, we'll need to wait and see. But if you look at this from a weekly time frame, right? Looks, how poised does it look? Lovely area of demand. See price head down here, and then boom, next push to the top side. So I still do think there's some more downside for this, even on a daily. Obviously we're in this kind of, we have this indecision candle here, and we have this area of demand where price is bouncing off of a couple of times. So, you know, yes, we could absolutely see price react from here and continue higher, along with the fact that price is within below equilibrium, so the pullback can be complete at any point in time. But with lots of inefficiency below, I personally think we're probably going to see a bit more downside to this. Yeah, definitely. Intraday longs are looking good. Like I said, I would just like to see, currently we have this lower high, we have this lower low, you know, all I want to see is this price going to create a new low and do this and then shift, or do we come down here and then just break above and then continue higher? Or do we just break through this? We just, you know, structure will dictate and determine where we head. Yeah, exactly. And again, I'm not even looking at those higher time, because in order for those higher time frames for me to start looking at the daily flip and stuff, you need like the swing structure to shift. You know, this was the last low, that was the last lower high. We have our current low, and there's our high. So if price shifts bullish here, for example, where we are now, I'm only looking to trade this up into this region of 1955 here, and then expecting price to continue down. The only time I'm going to start expecting price to start breaking the daily high, start heading back up towards the all-time highs, is can we get a break above that and then retrace and start pushing higher. Till that point, my bullish bias only takes me up until this point and then a continuation down. Yeah, exactly, we do. Because why do we need to see confirmation and a shift? Because we're looking to trade the reversal. For sure, yeah, day trade takes small time. Yeah, and you got to remember, it really depends what you classify. You know, some people take 15, 20, 30 pips on the market in a day with huge account sizes, and that's substantial money. So it's not really small, you know, it is still significant. It's a small piece of the bigger pie, but that small piece is still considerable in terms of monetary value. Alright guys, I think I'm gonna be done. I've been on for yeah, like nearly an hour and a half. So everyone have a good day. I hope you enjoyed the stream. If you did, remember to hit the like. If you're not in the Discord, join. If you are, I'll catch up with you guys soon. Maybe something we could discuss on Discord. Yeah, indeed. Yeah, defo it is. But listen, good to see you, Juggernaut. Have a good one, everyone. Trade safe. Remember, we have news coming up shortly. So yeah, be careful. Catch up with you guys soon. Take care.